also known as a sports card tax guy. If you're not thinking about what you're doing with your taxes, you're missing out. You're going to want to hear this episode. This guy's going to drop some seriously important stuff on us. We all need to know about it. Jonny, welcome to the show, man.
Welcome.
Thanks, guys. Good to be here.
So, we appreciate you, man. I'm going to tell a quick story. Jonny, you have some brilliant branding. That hat right there. We were at the National. Jonny was doing, there you go, right up in our business. I love it.
From Lids, custom stitched hat.
That's right. That's the only way to do it, man. But yeah, Jonny's a sports card tax guy. He has found a niche. He's offering a service to people in the space. He is focused on the trading card space. And again, he's got a background that's pretty impressive. So we're going to get into it, have some conversations. But we found Jonny, or we saw Jonny at the National. We were trying to get some food after a very long day.
Yep.
And RJ said, "Hey, check that out." Not you, but the hat.
And it's important. I'm like, let's go tug on his shirt and be like, "Hey, what are you doing?" You know,
I'm telling you, man, because it's something you don't think about. I mean, everybody wants the big hit. I want a 101. I want a $50 million card. I mean, Caitlin Clark's last card sold for what, $400,000, and you're all excited. I want that card, but then you have to think about, like, oh wait, taxes. It's critical, and that's where you come in. And you offer a service that you're focused on the space. So we reached out to you, and here you are. If you look down in the show notes real quick, all the links to where Jonny can be found. You could reach out to Jonny. And Johnny's got some cool trading cards you can get. You can get a discount on his services. We'll get into that later, Jonny, so don't show us that yet. But let's real quick hit your background. You are not just a novice that said, I don't know, let's try sports cards. You grew up in the hobby, right?
Yeah. I wanted to be a professional baseball player, right? So my whole life was towards that. And then in 2001, my dad started buying me some cards. We'd go to card shops, and he was transitioning. He had just finished his business, and then just kind of stumbled into it, bought some deals. And then before we knew it, we had 1 million cards in our living room. And we every year we had a different, Beckett physical price guidebook, and that was my job to sleeve and price them. And then, in 2005 he bought a bigger deal, and he started an eBay account in 1999. I started mine in 2010.
Okay.
So I just always was around it, listing on eBay, and then went to college. The whole thought, baseball, I took a different route. That didn't quite work out, but went to the University of Florida, studied accounting, and then the whole thought was I come back and take it over.
Yeah.
But just had a slightly different path. And then, but what's really cool is
You mean take over the card business? That was what you were thinking, and you said, "Man, never mind."
Yeah. At the time, I mean, it takes a lot. I mean, I saw through 2008 to 2010, all the dips. And so this is before the 2020 boom. But yeah, I just liked managerial accounting and just different businesses and understanding things. So anyway, I decided, like, I had a general accounting firm, but then I started specializing earlier this year. And that's been a full circle, which is pretty cool. And it's been fun. It's a fun thing to specialize in.
Yeah. Now let's talk real quick about credentials, and I mean real quick because I don't know that sports cards guys and gals will be overly aware of it. But you're not just any CPA, accountant, tax guy, right? You're federally licensed, right?
And enrolled agent is a license, the highest credential from the IRS, so you can technically represent people in all states.
There you go.
But it's just a matter of your experience. EA, CPA, those are licensed, but yeah, there's a lot of CPAs that don't know how to handle.
Right, but you're coming to the table with an ace in your hand. You've got it all. You can represent people everywhere. So, if people are interested in talking to you and they're not where you're located, you can still help them out. Okay, perfect. All right, so tell us about the transition. You started the business, I think, recently, right? You started your focus on the sports cards recently, right?
Yeah, like with YouTube, because Man, I spent hours and hours, and every day I listened to a couple hours of sports card podcasts. And I saw maybe twice a year, you'll get these tax sports card tax videos because it's trending. It's around April 15th.
Right.
And one of them just amazed me. You had very high engagement, a lot of comments and likes, and there was like 50 comments with no responses.
Ouch.
Yeah.
You know, good questions people were asking.
Yeah.
And then you go to Reddit, Facebook groups, and get responses, but what
Nuts.
kind of responses, right?
Right. And who's responding, right?
Yeah.
Right. Given, and you've seen, so you saw an opportunity, right? You said, hey, people need help. I'm an expert. I can help them. So you started this, the business. And again, you started it this year, right? 2025 or at the end of last year?
The sports card side. Yeah, I had one sports card client and then
Yeah.
a bunch of random HVAC law firms, etc.
Okay.
But yeah, it was like YouTube content. Honestly, I really want to just provide. There are a couple guys also servicing sports card businesses,
Sure.
but no one has made content in a regular way. So that part is something I'm, really wanting to keep doing and provide as a resource.
Yeah. I mean, your content's great. Again, jump in the show notes because, prepping for this, watching it, it's overwhelming what you don't know. When you start watching
Yeah,
somebody like yourself that's an expert, and it's eye opening what you don't know. And, you definitely need to protect yourself as you're entering this. So let's dive into it. There's a billion questions we can ask you, but breaking, it's the hot thing. It's the sexy thing. It gets all the attention. What do you see in that space that's not going well that people could be doing better when it comes to the
um,
finances? I guess clearly that's what I'm talking about.
well, this is inevitable and it's okay. My recent experience with Topps Chrome SpongeBob.
Yeah.
I entered the break a few days ago, and yeah, two of my spots had zero cards, so that kind of hurt.
Well, yeah,
Yeah.
you got
So
skunked.
that's okay. It's built in, and but that's something that not to change. But in
Right.
terms of finances, it can go all over the board. I don't know where to
Yeah.
start there.
Okay. Well, let's jump into tips. Like, you have a couple tips. Like, let's say I haven't broken. I'm intrigued by whatnot. I can do this right out of the gate. What are some things before I even start that I should be prepping for or planning for when it comes to my income from whatnot or Fanatics or wherever you're breaking?
Well, your income is all through a credit card processor. So you'll receive a 1099 if you make over 20,000. 2025, it's back up to 20K because Trump, that big beautiful bill, it was supposed to be going down to 600, but it's up to 20,000.
Okay.
Nevertheless, so that's an interesting thing. You have like a lot of people source at card shows and you might withdraw 50,000. Some of the big now this is selling singles, but on
Okay.
Whatnot.
Right.
And now you have your cash purchases, which are just cash withdrawals. What would, if the IRS would ever look at that, what's to say you didn't pocket that cash? It's really important to have a backing and a log for those purchases.
Okay.
Sales are pretty easy because that's going to be reported right away. Everything's sold through the platform. So you have to really take care of your deductions.
Okay. So having a log. Okay. I took out 50K. I don't know who you're talking to, but you take out 50K, go to a card show, you make all your purchases for your whatnot shows. You need to document that, what it's for, with the date, what you did with it. Do you need to get as detailed as the cards you bought with that 50K?
The more detail, the better. But in reality, who has much time when you're quickly going across doing so? There's a reasonableness to it.
Okay.
I like to customize solutions for people with what works for them.
Okay.
But yeah, if it's just cash out, there should be something assigned to it.
Okay. Okay. That makes sense.
All right. Well, say now whatnot is going well. We're doing single shows like this, but I haven't really like formed a business yet, right? I'm not like an LLC or anything like that. What's that point or that dollar amount where I'm like, I need to take this action to find someone like you and to create like a structured business to make sure it's not just coming through me as a person, but like an entity?
Yeah. You are the moment you make a dollar and like you're trying to operate as a business, you are a business regardless of having an LLC or not. Some people wait a little too long, and in some ways it's okay. I had this one guy, he was 1.4 million in revenue, and he's a vendor, and he profited 200,000, which is, quite good,
Mhm.
but he was running all this under his social security number. So he did not have an LLC set up, and that was okay because he actually had separate bank accounts. That's the main thing, is even if you are just operating, because no one knows at first if this will work out for you.
Right.
And but you should still exercise to keep separate bank accounts, no commingling as much as possible. And
Okay.
then he eventually did an LLC because we're going to convert to an S corp, which is a little more for tax savings. But for breaking, your liability, that's why you start an LLC. People start it, I think, for one, it just feels official, and that's what you should do. I mean, if it helps you get, your official business, California is like $800 a year for an LLC. Florida is 125. So if you're really small, sometimes getting an LLC right away might be a large expense.
Yeah.
Then if you are breaking, so you're buying wax and you're selling on whatnot, to me, there's more liability risk when if you pull a big card and it gets slightly damaged, then that person can come after your personal assets. So that's the value of the LLC.
Okay. So it protects your personal assets if somebody comes back and tries to get you for whatever it is that you ship them. Okay. So RJ kind of hit it. One of my questions was, well, what qualifies as a business in the eyes of the IRS? So what's that point? I think RJ kind of hit it. And you answered it, but what qualifies the moment you start operating as a business, meaning getting on and selling something? That's
Yeah,
it.
it could be before you're an LLC. Some people are quick, which is great. Right from the beginning, they get their LLC and even a sales tax certificate, EIN number, and they're rolling.
Yeah.
But often people are a business, but you don't have the LLC yet.
Okay.
You do have to consider: are you a hobby or are you a business?
That's my
That's
next
important.
question. At
Okay.
what point does at what point does the IRS look at it and say, well, it's just a hobby? Like, is there a difference? Like, does that matter?
Yeah. Yeah. We're in the hobby, but not if you want more tax deductions, which is true. Yes, you get more tax deductions as a business than as a hobby. The IRS will classify your activities, your sales, as either hobby sales or business sales. And it's more advantageous for business sales because you can now deduct operating expenses. As a
Okay.
hobby, you can deduct your cost of goods, your cost basis, just like a stock. You bought a card and then you can also add your PSA or JSA authentication fees that to your cost basis. But the shipping, supplies, and travel expenses are not deductible if you're a hobby.
Ah,
Right.
okay. So before the show, I asked you, if you're going to a card show in San Diego and you travel out there as an LLC,
Mhm.
you can write that off. Um, right? Correct. You can write that trip off or pieces of the trip. How does that work? Because a lot of folks are traveling to card shows. I mean, if you want to go to some good card shows, for instance, the National, 150,000 of your closest friends are there. Can everybody that was there write that off?
Even having an LLC could be a little shield if you're not truly operating like a business. So merely getting an LLC and still acting like a hobby or an investor, there is a 5-year period where, I mean, it's kind of crazy how long this will take to go backwards.
Uh-huh.
But if you are at a loss, you're not profitable, you have a loss in your business that you report 3 out of 5 years, then there is the possibility that the IRS would go back and say, "You were not a business. Please show me these records, these things," and then they will disallow those operating expenses. If you truly were just maybe once a year selling because you're trying to self fund your own collection, and so it's important. Yeah. So what determines, like, are you actually operating as a business or is it just as a hobby? It's a gray line that there are certain tests that they do, but
Okay. All right. So what if I said to you, it's just trading cards? The IRS isn't going to send an agent to my house. Like, what is your advice to somebody that thinks like, well, I'm only doing 30K a year, mainly is for IPC, but I am making like, people think that way, right?
Mhm.
What's your advice to, if I said that to you, how would you respond and be nice?
I agree. I agree. I mean, that's not really going to happen. An IRS agent coming to your door, and it's true. It's a self-reported system, and
Right.
so how will they know? There are certain things like if you deposit more than $10,000 of cash into a bank account,
Okay.
then the bank will send a report to the IRS.
Oh, I
Now that
see.
doesn't mean, but that's suspicious because of like drugs and cash, things like that. So yeah, if you're dealing in that kind of thing, there's some exposure. Um, but it's gonna be very, very difficult for them to know.
Okay. Well, I was expecting you to say, that's a dumb thing to do because what if next year you triple and you're the 1.4 mil guy? You got to put your
Mhm.
protections in place now, get your systems and structures in place now, and be ready for that growth. Because who knows, right? That's what I thought you'd say. But I think there's an IRS agent in my house now. My dog's in there. So um,
Well, of course I advise report your income
yeah,
always, you know, and then there's always deductions that we can find, um, because there are 75% penalty for intentional um, misrepresentation of your statements. So if you are the thing that should concern people though is, although I did say like the chances are just extremely low,
right,
nevertheless it's probably going to get higher because of the limelight of sports cards. Also, it is thousands of jobs have been cut from the IRS, so there's that factor too.
right,
It's hard to say the future, but you have to, what should be kind of concerning is random audits. Okay, so you can be selected
sure,
just, randomly, and that would be the concern.
okay.
And your
So
conscience. I mean, it's a hard thing. I mean, honestly, yeah, it's should there be this kind of levels? There's so many different kinds of taxes that we have. So many have a personal disagreement with that. And so, but nevertheless, we do live here, and there is a certain kind of set, and there is a certain consequence as well for not following it.
yeah, I mean, also, got to position yourself for success, and you don't, let's say you become the $1.4 million a year person, and then at that point they knock on your door, they look back, was it 5 years you said, 10 years, whatever it is, and they say, oh yeah, well, you made a few mistakes here, and your 1.4 million is no longer the case because you owe us X, Y, and Z. So, I mean, get yourself positioned for that growth, I think is a smart move. What
Yeah.
mistakes are you seeing the most when people come to you? Like, let's say I called you tomorrow, we walk through my business, wherever that may be. What mistakes from the trading card space do you see the most?
Yeah. Things that people are not aware are, one thing is self-employment taxes. So this is a big surprise when you have this as a side hustle. Uh, you are used to a W-2 job where your taxes are taken out. And so there's Social Security and Medicare That's 7.65% that you as an employee are paying for your future,
Right.
potential
Yeah.
Social Security. And then the employer that hired you is also paying a 7.65% to the government.
Okay.
So what people don't realize, even as a side hustle, you are the employer and the employee of your single operation. And so of all the profit that you make or report, you would pay 15.3%, both the employee and employer portion, as self-employment tax. That's different than income tax. And income tax starts at 10%, 10, 12, 22%. And
Yeah.
so if your W-2 job is bumping you into the 22 percentile, that means the additional profit that you're making is all income tax at 22%. And every dollar you make is 15% self-employment tax. So that's 37% that could be a big surprise.
Yeah. That would sting. And I'm going to be honest, RJ, when he started talking that last time, I actually looked down to start taking notes
I've
because,
been down that road. So
Mhm.
I
Yeah.
own my own marketing business, and we've in the very start of that too. You realize very quickly it's set up differently. Really, like you're like,
Yeah.
oh, I'm paying all this money now. I'm doing all this now. I got to hold all this money back, and it's not like you get this lump sum of money. And you're like, we have all that money. No, it's you gotta hold back first, or you can get in trouble pretty quick.
Yeah. It's especially challenging in sports cards because you need capital. It's such a cash intensive business. And so what's recommended is um, going along with what's required by sole proprietors, LLCs, disregarded entities, you have estimated quarterly tax payments. So every 4 months, roughly, you would prepay your self employment, your estimated taxes, as
Okay.
opposed to the government taking it out of your paycheck. And if you don't prepay, then there's some penalties and interest. So what you do is you would have some kind of measure every month where you can shift aside some income to plan for it and have it in a savings account. And at the end of those 3 months, you just ship it away. Or what if a big deal comes up? Then it's going to be up to you. Like you can maybe just make an IOU. Maybe you save $5,000 to pay for taxes, but just remember there's an IOU. Use that to pay. Then you just have to know you might pay a little interest and then try to pay it back as soon as possible. So you have some, you want to do what's best for your business, but just don't forget about the accumulation of interest and penalty.
Yeah. And I'm just going to say it again real quick. Look in the show notes and connect with this guy because, I mean, you need an expert for this stuff. I mean, and you're the guy to do it. I mean, it's complicated, and there's a lot to it. Let me ask you, card shops, breakers, people that you're working with, if run correctly, are these profitable businesses from your perspective?
Hmm. Yeah. Yeah. There's a lot of expenses. It is true. I mean, we're not dealing with a service business that has 60% net profit margin. I mean, right away, number of guys have 25% gross margin. So you have gross is going to be sales minus your cost of goods, and then net is cost your gross profit minus operating expenses. Now
Right.
with a card shop, rent, payroll, travel, supplies. So yeah, they're profitable, but
But not to the
certainly could be
level of a
split.
service business. I mean, the
Yeah.
margins are not there. Yeah. Yeah. That's so when you talk about for a breaker, all the shipping labels, the
The top
top
loaders,
loaders, all that
sleeves,
stuff.
like
I
yeah.
mean, I think what you said at the beginning of the show is huge. Start an Excel spreadsheet and document everything, right? And have it inventoried out or however the word is. I paid all of this for my supplies, and then meet with somebody like you to put yourself in the best position possible, right? How are the top performers in the trading card space structuring themselves? You mentioned S cores earlier. LLCs? How are they structuring themselves? The ones that you see that are the most successful?
Yeah, it's S corporation. So this is also one mistake I had mentioned earlier. When you have a legacy accountant, this lady was 20 years the accountant for this person, this guy that recently started his sports card business and wasn't very proactive. And now he had a 200,000 profit where he could have saved almost 10,000 in taxes just merely by switching his entity to an S corporation. And so normally you would want to make that switch now. There's all kinds of perspectives, but
Okay.
uh, for me, it's going to be around 50,000 profit and some, you see like there's some gradual growth.
Okay.
That would be a good time to switch. And there's a whole process for that. That's when you'll start feeling the benefits. And then I guess there are some unicorns. You have some giant, breaking companies, and some might make sense for a C corporation.
Oh, wow. Okay.
I mean, you got to be like a million profit for that point.
All right. So real quick, let's back up one step.
Yeah.
So can you just describe, just in case somebody out there listening is like, I don't know what the difference is, LLC versus S corp. Can you explain the difference between the two? I mean, from the structure
Yeah.
perspective.
Yeah. An LLC is either a single or multi-member LLC. And then that's your business entity. But there's a tax entity that's different. You could be an LLC and be, I think, 3 different tax classifications. So an LLC that's a single member LLC, there's you could be a disregarded entity. So disregarded entity is there's no difference between you personally and the business. That's
Okay.
a sole proprietor when you first start out, and a single member LLC by default. That means you're going to pay all of your profit. You're going to pay self-employment tax. When you get to the S corp, the primary benefit is you're only going to pay 15.3% on a portion of your profit.
Ah,
If you make 150,000 profit, then as a disregarded entity, sole proprietor or single member LLC, you would pay 15% times 150K. But if you converted to an S corp, you would pick a reasonable salary, and let's say it's 75,000, you would pay 15.3% of 75K, therefore
okay.
saving almost 10,000. So you have disregarded entity, single member. If you're a multi-member LLC, by default, you're a partnership, which is a separate tax return due on March 15th. So that partnership, it flows through and it doesn't change the self-employment tax. You always got to be, the self-employment tax is the thing you want to eventually try to reduce.
Yeah.
Only you still don't get that benefit from a partnership. If you are a single or multi-member LLC that files Form 2553 to change your tax classification to become an S corporation, now you can get those benefits. And that's a whole separate tax return.
All right. So go to the show notes, find this guy because you need his expertise. I'm not kidding, man. I'm trying. My goodness, there's so much to it that you're not thinking about. As you're talking, I'm thinking, we've got our next guest is actually the head of collectibles for Whatnot. Is our next guest will be on.
Right on. Cool.
Record him next week.
Awesome.
And I was reading an article that he was in, and I think it's 1 out of 10, it may be 2 out of 10 people on Whatnot, just Whatnot. That's their full-time job. They're that successful. So,
Nice. Yeah.
I mean, obviously it's not just trading cards. People are selling clothes, shoes, whatever. It's expanding. It's an awesome platform for entrepreneurs, but man, how many of those people know these implications? They're getting on, they're crushing it. And, they're not thinking through some of these things, and they got to protect themselves and their family because you don't know what's coming around the corner. And I hope it's just growth. But man, there's so many different things you can do to position yourself for comfort and safety.
You can get in trouble pretty quickly too, because when you're done selling and you hit that tier, right, you can cash out right away. And whether it's just cash to the account and you're like, all right, we're good to go. But you once gonna have to realize implications down the road later, which is something a lot of people don't really plan for. So
Yeah. I mean, you're enjoying the juice. You're enjoying. I hit a Caitlin Clark 101. I hit a whomever one Aaron Judge 101. I've got money coming. I'm hitting it big, and you're just celebrating. And then one day, you know, the IRS said, "Hey, your bank told us you deposited $500,000. Where'd that come from?"
So I guess on that question, right? If
Yeah.
you hit that 101 or that really high end card, like the Paul Skeens patch where it's going to sell for $1 million,
Oh
and
yeah.
you haven't sold it yet, but you've got the memorabilia piece, right? Is there implications that way of like, hey, I've got this in a break and I own this as a possession? Or is it still when
Oh,
the item is sold and you actually, pull in the profits from that? Is there any implications from holding it versus just waiting or pushing through the sale at the moment?
Yeah, a guy DM'd me on Instagram, said he hit a card that sold for 100,000. It's pretty it was like a $30 slot on
That's
Whatnot.
awesome.
So one of
good
those
God.
stories. Yeah, imagine those happening. And
That's all I
uh
can do because it doesn't happen to me.
he he has a business. But then so that makes it easier because you could just roll that into your business operations. And whether you get the card or not, um the sale, well, it gets triggered when you sell it. So that's when you realize the gain of that profit.
Yeah.
That would be business income, which is more beneficial because now you can take a trip to San Diego and go to a card shop
Go on.
for market research.
Market.
But
Full
So
it's
circle.
documented,
Full circle.
yeah.
as a way to reduce some of that profit, or you can buy more inventory, or you can do certain strategies by the end of the year. Um, which, by the way, maybe later, there's all kinds of like pay your kids. There's
Yeah, I was going to ask you
retirement.
about that.
That
Yeah.
that kind of stuff is important too. But I would say if that person hit the card and they're just a normal, I mean, we do need many people that still love and enjoy collecting,
Yeah.
just not to make a profit, just they like collecting and it's a hobby. So
Sure.
if that's the guy that gets it, you're now you're going into the 28% collectibles tax, which is scary, but it's do you should I explain that briefly? It's a little
Of course,
Yeah,
man. Explain
please.
it all.
okay. So in like the 1990s, stocks at one point had a maximum long-term capital gain of 28%, but they changed it and so that there's now 3 brackets for stocks because this whole time collectibles is considered a capital asset, just like stocks are capital assets. The
Okay.
IRS lists a definition of collectibles, says like rugs, coins, but sports cards is not technically listed as identified as a collectible. I forget the exact term, but the last thing it says and everything else that's similar to it. So I'm of the opinion that yeah, Pokemon, and I have some Pokemon clients too, which is kind of fun. But
Yeah.
sports
Right on.
cards, that is, I would say, a collectible, meaning it's either going to be a capital asset, just like a stock, if you're an investor slash collector. That very card becomes inventory if you're a business. And so the tax treatment of inventory versus a capital asset is different. So if you're a collector and that's a capital asset, uh, this will make more sense when I talk about stocks. There is a provision where if you buy and hold over 1 year, you sell your stock after 1 year, that's a long-term capital gain. And if you're under, I believe it's like $80,000 married filing jointly, to double check, you might pay 0% tax on that gain.
Oh, okay.
There's some tax planning there. And then it goes up to 15%, and then the highest bracket is 20%. So it's a 3 stages, 0, 15, and 20. Collectibles are not the same way, unfortunately. And so, furthermore, if it's a short-term capital gain, that's going to be taxed as ordinary income, which is going to be at whatever marginal tax rate. So if you're at 22 percentile, then it's a short-term gain. So you just pay 22% of that. And Robinhood will send you your 1099 and that'll be, all set. With sports cards or with collectibles, it's like usually it's self-reported. So that's the first thing. Maybe with this big deal of 100,000, I'm sure the auction house would issue a 1099 because it's such a public event. But nevertheless, if you buy and hold over 1 year, collectibles are still at a maximum of 28% tax. So back in the 1990s, every stock was 28% for long-term gains. Collectibles remain 28%. However, it's deceiving because if you're in a lower tax bracket, so you hit a big card and you're just got a basic job, you're in the 12% tax bracket and you sell it for a large gain,
Yeah.
then you're going to pay 12%, your marginal tax rate. But if you're a high income earner at 35%, then your gain is capped at 28%. So you pay 28% tax if you're a high income earner. So anyway, there's like the 28%, collectibles tax is out there, but that's roughly about
Okay.
it.
All right. We're at the point now where I'm going to do a couple different things here. Okay. We're going to get weird. Okay.
Okay.
What am I not asking you? So you're the expert, and it's clearly an exceedingly complicated thing. That's why you're licensed and you have to go through an extensive, not background, but extensive training to get licensed. You probably have to do upkeep every year on that, learn all the new laws, because I'm sure that's complicated. So let's boil this down to Matt. Understand. What am I not asking you that collectors need to know? Give that to us, man.
For collectors.
Or you know
Yeah.
what?
Yeah. It's good
Yeah.
to distinguish collector, hobby,
Okay.
investor. That's
So let's start there,
kind of strategy.
and then we'll go to the other side. So start with the collectors. What am I not asking you from that side?
It's hard because there's not much thing you can do to change it. You can lie. I mean, I would
Well,
not recommend lying.
neither
It's
do
just
we.
like there's just not much. I mean, you can be educated and just know that there's going to be more tax coming. Um,
Yeah.
so it's going to be you can time things. Maybe if you want to make a sale, if you're able to meet with someone and see what your tax bracket is, and for example, when you go from it's 10 to 12 to 22%. So maybe there's a way to stay in the 12% bracket. So you save the 10%.
Okay.
So figuring out when you want to piecemeal your collection. Now again, I mean it's like cash. So people, if you sell your personal collection, you should. The hardest thing is to determine your cost basis, because if you did sell your childhood collection and you sold it for 20,000, but yeah, like how do you determine how much that costs you from 20 years ago, or
Right.
even COVID times 5 years ago when you're ripping wax, and um, so you just got to do your best to come up with a cost basis and not pay. Okay, this is good. I mean, one person, he got a 1099 from eBay, and he was just selling on the side, not as a business.
Yeah.
So he got the threshold and he paid tax on all, like the full amount that the 1099 was.
Yep.
He should have reduced it by the cost, but he
Okay.
just way overpaid. So you want to
Yeah.
know how
Because
much
he
you're.
didn't talk to somebody like you. I mean, I'm not. That's not a joke. I mean, I'm being serious.
Yeah.
You've got to talk to an expert.
Yeah.
I mean,
I guess if you get that in the mail and you're just like, oh man, I guess I have to just pay tax on all this. So that's true. You could reduce your cost basis though. Don't pay all, on your sales,
right.
on your
But
profit.
I need to talk to somebody like you to figure out how to do that. Unless, I mean, I'm sure you could Google it, but I mean, you want to protect yourself and talk to an expert. All right. let's go to the other side. The profit hunters, if you will, whatever we want to call them, the folks that are on Whatnot looking to side hustle, get that, buy it for 100 and sell it for 1,000. What am I not asking from their perspective? Somebody that's listening is like, I'm doing this. I'm making $1,000 a week. What are they not thinking about? And I'm not asking you that they should be aware of and think through.
Yeah, I've really enjoyed with YouTube over the last couple months. I've been getting quite a few people reach out that are just starting in 2025. They started their little side business, and it's been
Yeah.
really enjoyable speaking to them. For those people, I would say, just in a business sense, it's good to consider your business model. How do you think you would like to make money? Will you be looking for raw cards to grade? Are you hoping to go on Whatnot? That means you need a lot of inventory. Are you going to travel to vending shows? So it could be a combination of all those things, but that'll help your strategy if you have a sense of how you're going to be selling. And then I would say you should, as quickly as possible, separate your personal and business funds.
Yeah.
Um, because initially people don't think of themselves as a business. It's just a side hustle and you can just keep it. But right away, the IRS says you're operating as a business. If you want those operating expenses to deduct it, then to be a business, you have to like separate your
It needs to be
account.
clean. Yeah.
Yeah.
All right. Do you have
So
any tips for those folks on the conversation with their spouse? No, I need to have my own account too. I mean, how do you work through that? And like for real, I mean, it sounds kind of funny, but I mean, it's a necessary part of what they're doing, whether it's a hobby or they're trying to establish a foothold on Whatnot Fanatics. I mean, it's just the nature of the of doing business, right? You got to have that separate account to protect all the other assets.
yeah, I mean, I would just get an LLC, and then you have to apply for an EIN number, and that with the EIN, you can open up a bank account. You can just open up something like I have PNC, I've used Chase, just something that works in your workflow, and then open up a credit card. I love Chase. I've gotten many credit card points, and that's a benefit
Yeah.
of like a high turnover business. If you're not doing cash, you can rack up credit card points. And one thing there is, so the business credit card I got, it's like $750 bonus if you spend a certain amount. And one tax thing is you can use those business credit card points or miles for personal travel. So you want to try to not use your business credit card points or travel miles for going to the national.
Ah,
You want to charge that, so it's an expense. But
got
if
it.
you use the points, then that's typically there are some stipulation, but yeah, you could use that for personal things. That's a nice, use business expenses. So
I
that
like
that
it.
might
Yeah.
help your significant other, for getting these
Yeah.
bonuses here. But you just from the beginning, yeah, it's a business LLC. We have a separate business, and then check in on it.
Yeah.
So I wanted to bring up, you touched on it a little bit, and this has been in the back of my mind because I have two young kids, 8-year-old and 11, right? And we rip cards together, we buy hobby boxes, we go through stuff. They're big into Pokemon, like all this stuff. When you're in a business like this, how can you, pay your kids or give them kind of a foothold with some of the income if you're making enough to be able to do that? Like, does it have to be on the S Corp side? Can it just be on the LLC side? Do they have to pay taxes or is there a certain amount that you can pay up to? What does that look like if you want to incorporate someone that's, not ready to pay their own taxes through the IRS and, on their own as a grown adult?
Yes, I, in my own experience, I was paid, but I don't think I was really paid much until high school. It was more like allowance, and I could pick my own cards. But what could have happened was I could have been paid a fair wage from my dad's business to me, and then it could have been taken directly into a Roth IRA. So that's one thing people like to do. Um, but the kind of parameters are, you can pay if the business is owned by parents, one or two parents, then you can pay your children under 18. They have to be under 18. And then the payment you send to them is payroll tax free. So you do not pay 7.65% as the employer, and they as the employee do not pay 7.65%. So that's your main benefit. You can pay them without, you don't have to pay them under the table. You actually have to report it so that you can get the benefit of the deduction.
Yeah.
There's no payroll tax. Furthermore, they would file their own taxes, but the standard deduction for an individual in 2025 is 15,700 something. So if they make less than 15,000, and this is where people will like pay their kids exactly $15,000 because it's right under the standard deduction. But that's a little not safe to do just because it's right under. So you will also need, it's a fair wage. And so you don't need to pay them minimum wage, like $8 an hour, $10. You could pay them 20, 25. I mean, you could, if they travel with you to the card show, that's like their time, coming with you, and they're actually helping. Or you can have them pack and ship things. And so you just would have the documentation of here's the hours and roughly what they did. You can pay them on a monthly basis. But with the Roth IRA, you need earned income in order to contribute to a Roth IRA. And so now you're paying them a wage. And if you pay them, say, $9,000 in the year, which seems reasonable of a whole year of working, per month, then you have up to $7,000 worth that you can contribute to a Roth IRA.
Ah, that's
So
nice.
you need earned income to do that.
To
So
be
the
able to
child
do that.
can do that.
Okay.
Yeah. And then there's a couple things too that make this sometimes not possible. For some reason, there's a state law. So that's the federal law, but each state has a different rule. So some states do not allow you to employ, it doesn't make sense, kids under like 13 years old. So you have to double check that the state will allow you to employ, because you have to like issue a form to the state and the federal to like have the paper trail and everything.
Yeah.
And then with S corps, you actually don't get the payroll tax benefit. So there's a workaround. You have to you can't not pay payroll tax from an S corp to your child. You have to create a separate entity called a family management company, and it's like a little workaround
Yeah.
that you do.
Man.
Look in the show notes. I'm telling you.
Well, I'm not.
No, yeah.
As you guys were talking,
Yeah.
I'm thinking, and I'm like, our job today was to introduce the world, our audience, to Jonny, because it is complicated.
Yeah.
And it's not something you want to mess around with. And we're certainly not going to solve all the problems in a short podcast. I mean, we love talking to you, and I promise you it's not going to be the last time we have you on the show, of course, unless you say no. But I think it's important to talk about this, but I think people are going to get the value by going to your channels and paying attention. But we have some time, so we're going to do some things. I've got some rapid fire questions. We've hit some of them, but I want to have you answer. We're going to hit them real fast because I think maybe you'll answer them a little differently. You're not going to change them. But before we do that, you went to the National, and I love this. First of all, you started your business this year, and you're like, I'm going to the Super Bowl of the hobby and telling the world about what I do, because that's where they're all at. You've got trading cards of your own. Can you show us those and tell us what they're about? Because I think this is brilliant, what you've done. And RJ hasn't seen these yet. I was fortunate enough to see them earlier. Go ahead, man.
Thank you. These are the tax packs.
Okay.
And
Yes.
got the odds on the back of what you can
Look
pull.
at that. But hold on now, because he's showing you the odds of what you can pull, and he's going to explain, like, it's not just a one-on-one. Like, let's do this, man.
So inside, these are the cards inside. There are 3 cards in a pack. The first 2 are the same. And then the third card is your hit. But there's like 4 different options. So the first card is just like a business card basically.
Yep.
And you can tell what Topps
It's
year this is.
brilliant.
Yeah.
Brilliant, dude.
The 1985. So yeah, this is a discovery call. So I would say like my primary thing I will offer to people is a free discovery call. So 30 minutes just to mostly I just learn more about what they're doing. And
Mhm.
then if they're a fit, I would offer a service. A service I've been doing a lot recently is a setup and consultation. And
Okay.
then if I don't think they're a fit, I'll just give them some tips and like maybe later on might want some more help. But
Yeah.
so that's the discovery call. And then the third card, this is the common. Most packs have this in ebook, so it's 8 chapters called the Sports Card Tax Playbook.
Okay.
And then these are all what do you
Yeah,
call
it's a damn
pre?
refractor, man. Look at that.
So this is pre-production. The other one, they're actually numbered. So there's number. This one's
Yes.
numbered to 10. The tax planning session, numbered to 10.
Okay.
And then this is numbered to 5,
Look
personal
at that.
tax return. And
Wow.
then this is the numbered to 1.
There's look at that. The McGuire. I love it, man. So, okay. So real quick on the, out of 5, so you get the free discovery call, which I think is brilliant. If you didn't hear that free discovery call with an expert, I mean, if you're blowing up in the hobby, you got to talk to this dude. And then what do you get for the 5, the out of 5, what was that again? What's the,
That's a free tax return. I'll file your tax return for free
That's awesome.
if you get it.
That's crazy.
the value there?
The value right
My
there.
God.
Yeah. Where do I get these packs from? Am I just like everyone if you had a show?
RJ and Argo.
How- yeah.
Let me get it. Okay. And then the 1 of 1 is full service. Like, what is this?
Yeah, that's a personal tax return. I'll file your personal tax return for the 5. I'll do personal, like if you have an S corporation, business,
Oh, okay. Okay.
tax planning. Yeah.
Okay. And this isn't a joke because RJ just asked it and we were laughing, but where do you get these?
Yeah, my website, sportscardtaxguide.com, and then /tax -pack.
Don't worry about it. It'll be in the show notes. So we'll talk and I will make sure that everything is there because people are going to be running to the comments because I mean, we're not going to solve this or educate the masses down to, I mean, hell, I'm going to call you for tax help now, but man, this is huge. So get to his website, go down to the show notes where again, this is complicated, but here we go, man. Actually, before I ask these questions, I'm going to ask a question I heard at the National. I can edit this out if I need to, because I'm not accusing anybody, but I heard this. Actually, I've heard it since I've been in the hobby. This whole money laundering thing, but you talked about cash, you're pulling out cash. Is that real? Do you think people are actually laundering money through the trading card space? And if I edit it out, if people's feelings are hurt, hell, I'm at the National and people are making jokes about it. So we were there as media, by the way. We were talking to a lot of people. And
Well, what came about this is we were walking
yes,
and we
that's
literally
right.
walked through like ripped $5,000 cash labels, which is on the ground. And I'm like, man,
Oh,
someone
yeah.
just bought like a $20,000 card because they're just like, oh, right.
Well, not just the rip. You remember we were over by the one company and there's a guy sorting out his bricks of cash. And I'm not kidding. He
Yeah.
was on a little coffee table and the bricks were that high. He was a very astute businessman. He wasn't laundering anything. I'm not accusing him. Do you think that's a thing?
Anything is possible. I mean, the majority of the time though, you're just people like cash because
Well, of course.
not trackable. So that's
Right.
one reason people like cash.
Okay.
Yeah.
So if I'm running drugs from Mexico and I got $1 billion and I'm going to go up to let's go to the National, RJ, and let's
Like-
wash some cash. Anyway.
Actually,
all
no, crazy scenario. This is my crazy question for you.
All right.
If
here we
I
go.
have, if I've just like PC'd a bunch of cards, right, and just haven't really reported what I have in that sense, if I had enough and I found someone that wanted to trade me their house for my collection,
Oh,
like what does that look like because we're exchanging, the items that have a value, but we're not like cashing in the value for finance? I don't even know. Like, is that even a possible scenario?
Yeah, bringing it on a smaller scale. Technically, if I trade my one card that I bought for $60 and I trade it for your card that's worth $100, that's a taxable event. And you would with no cash, technically, if you trade a card for card, you would report a $40 profit there. 100 minus 60.
Yeah.
So
All
yeah,
right.
in the same way,
All right.
that trade, yeah.
All right. See, I want to know, like, if I just came into like 50 perfectly minted Lou Gehrig's,
Very, very
right?
clever.
And then,
Very clever. Johnny's calling you after this. He's got some questions for you. All
But in
right.
practice, trades, yeah, it's like it's hard to keep that, but in such a large transaction like that,
yeah.
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 Well, see, because once again at the national, like you're eating, right? And the people next to you, they just have their cards out and they're trading. And I always was joking with Matt. I'm like, it's the best way to not be paying sales tax on something, right?
Yeah.
So
You're doing it live.
Yep.
Yeah. Hey, by the way, what was your reception? I mean, I know you said there's other folks in the space, but so you're at the national. What was the reception? Were people like, I never thought of that? Or how was the reception to what you're offering? Because I know you said you walked around with those packs and, giving them out, obviously doing the same thing we were doing is introducing yourself to everybody. What was the reception at the national for what you're offering?
I mean, everyone's busy at the national. But in the last couple months on YouTube, I've been getting more people reaching out.
Yeah,
So,
good,
mhm.
man. Well, I love what you're doing.
yeah.
I think I definitely want to keep this relationship and have you back on. All right, I got some questions, and who knows, this might fall flat, and I edit the hell out of this. But rapid fire, so just fire back at me. If I lose money, I don't have to report it.
Uh, you don't have to. You should. Yeah.
Okay.
You lose
All right.
money.
I can write off my grading fees. So I sent 500 cards to PSA, and it cost me how much? Probably
It's like
$2,000.
22 now, card or
Whatever.
whatever.
Cost
Yeah.
me that much money. Can I write that off?
Mm-hmm.
That's a
Yeah.
yes.
As a collector, you're applying that cost per each card basis, and then
Okay.
as a
I mean, I got
business,
one.
it's easier to just write it off. Yeah.
Okay.
I got one. My
All right.
rapid fire.
Rapid fire.
You talked like stocks earlier. So at the end, sometimes of a year, people will sell stocks that are at a loss, right? To kind of help reduce that on their taxes. If I'm at a card that I know is now at a loss, should I look to purge that and take that loss and then use that as a write-off?
Yeah. Mhm.
Right.
We
Yeah,
need
you
a
can
note-
wash
We need
your
a
card.
notebook next
Let
time.
me,
You're talking.
get my let me get Volpies out.
Um, eBay automatically handles my taxes.
Sales tax. Yeah. Yeah, not
Okay.
your other
Not the
income
rest of
tax.
your taxes. Okay. And then we've discussed this at length. I can deduct my card show travel.
Yeah, if that was your primary purpose was to source, network, do business, and you were there primarily most of the time, most of the days were there, then yes. Mhm.
All right.
And that
Well,
and
man,
that's also food as well. Travel while you're traveling, your meals are deductible. Your hotel, all that kind of stuff.
okay. So, okay. Well, I got to tell you, man, my mind hurts right now. But I'm serious. This is awesome. I love what you're doing. I really hope everybody that's listening, it goes to listen to your YouTube channel, wherever you're at, listen to them. Show notes are down there. But, man, it's like, and I'll speak for myself, RJ, sixth grader talking to the professor here, because my God, I thought we could, move the needle a little bit. And I would understand, but it's complicated, man. It's a complicated thing. You need experts like you. So contact Johnny,
Yeah.
go to his website, get your hand on some cards. Maybe you'll get a free session out of it, man.
So what's coming up next for you? Anything? Are you trying to go to more shows, or are you just trying to put out more content? Do you have a schedule that you're like, I'm trying to put out a video or answer questions weekly? What's on the horizon for you?
Yeah, I really believe in content. Every week I'm supposed to record one right after this. So that I'm excited about. I decided to get back into buying and selling as well, since I've been so I do have some of my own cards that I'm gonna resell.
Yeah.
So we'll see. I'm thinking about going to a show, setting up to sell that, and then maybe if I'm allowed, I can just put these or, have my business card on that side as well.
Love it, man.
But yeah, I'm gearing up for tax season pretty much. So October 15 is the end of tax season part 2. And then November, December is the planning time to just meet with people. But yeah, I'm gearing up for have a team. So I want to be able to service as many as possible.
Right on, man. Love it. Well, can't thank you enough for the education. Again, you're probably gonna hang up and say, "My God, those guys, what a hot mess!" Because I thought we'd hit this, but anyway, very valuable. Love what you're doing. Appreciate everything you're doing for the hobby and for people and keeping them straight. Hell, we maybe end up being clients. Who knows? Who knows what's gonna happen? But Jonny, appreciate you, man, and
Thank
look
you so
forward to
much.
having you on again, man.
Thank you.
Thanks for listening to Behind the Breaks. We appreciate you being here with us and helping us grow this community. You can find us on Spotify, Apple Podcasts, Amazon Music, iHeartRadio, and YouTube.
Make sure to like, follow, or subscribe, and we'll see you for the next one.